Hello, everyone. Good morning, or good afternoon, or good evening to some of our friends around the world, and welcome to this educational presentation. Now, today, I'd like to talk to you about trading retracements, and this is going to be an introductory course, so it's labeled 101 because we're going to go over the basics of trading retracements. Why? Well, because most people have very difficult time. Retracement trading is very common. It's probably the second most common way in which to trade. The only trouble is most traders don't get the type of results they're really looking for, because oftentimes when you think a retracement in place, it's actually the beginning of a new trend, or vice versa. When you think it's the beginning of a new trend, it's actually just a retracement. For example, if we look at this chart right here, here's a weekly chart of the S&P index. Now, the way most traders, including myself when I first started trading, the way we would analyze this would say, well, I took that course on the institutions and on the Fibonacci, and this is major resistance right here. So we're having obvious trouble getting through this area. And on top of that, we are making lower highs and lower lows, which is the classic definition of a downtrend. So most traders, their analysis right here would say this is a downtrend, it's the beginning of a new trend, and you either want to get out of the way of that downtrend, or you'd like to trade along in sync with it, so you'd like to short, looking for some type of shorting opportunity. Well, let's talk about retracements. The standard definition for retracements is they are temporary price reversals that take place within a larger trend. So therefore, the key here is that these price reversals are just temporary and do not indicate a change in a larger trend. So in other words, if we look back at this, if you have the correct analysis, this is not really a downtrend. This is just temporary, because for all intents and purposes, this is going to actually resume its upward overall trend. So this is what we call a retracement, or another common name for this is a pullback. Now, with the actual method I'm going to be sharing with you today, I'm going to actually share with you the entry rules to one of our most consistent retracement or pullback methods. You actually, rather than thought of this as a downtrend, would have seen this as a buying opportunity, and a signal would have been generated to buy right here. And it would have been a very nice trade, as you see. Now, one more thing I want to mention is that when this buy signal was generated using the entry rules that I'm going to be teaching you today, if you look at the date, it was the week before November right here. And if we look at the date going towards the left, it was 2016, 4 years ago. So this was a buy signal generated just 1 week before the presidential election. This is why we state all the time, if you want to look at fundamental news and economic reports and things that are happening with the economy or who's in office, feel free to. But it is in no way required. Why? Because it's our belief that the market tells you just about everything you need to know prior to the news events. Now, the market doesn't care or doesn't listen to who's winning an election. The market doesn't really care or listen to the jobless claims, because that's already factored in. What the market cares about is price, and specifically patterns, and really just basically announcing to you what it wants to do. It's our job as a trader not to analyze it and try to figure out who's going to win or what the jobless claims are or what the earnings are. Our job is simply to learn how to listen to the market and then jump on board with what information it's giving us. Now, I know that may seem complicated to some traders to say, well, Steve, I've never traded that way. I've always taught to look at the earnings, or I've always taught to look at volume or momentum, or to listen to what the economic indicators are, or who's in office. If that's difficult, don't worry. We actually developed our platform, the PTS Primo Charting Platform, to make retracement trading simple. You'll see how easy it is on our platform. All the displays are taken off of our platform, and you'll see how simple it is to apply this actual process today. So welcome once again. My name is Stephen Primo, President and Founder of Specialist Trading. And if you haven't found out by now, we are first and foremost an educational company. You'll see the attention to detail we give in educating you today. And someone would say, well, why do you focus on education? Why don't you just tell me what you're buying or what you're personally selling? Why don't you just tell me what you think the market's going to do? Why don't you just tell me what the best time frame is? I mean, in fact, I can't tell you how many emails I get on a weekly basis of students asking me that. It's because if you look at the way most so-called educators educate, that's what they do. They tell you what they think the market's going to do next week. They tell you what the perfect time frame is, or what stocks you should be buying or selling. And if that works so well, why is it estimated that 85% of all traders fail? Well, it's simply because that doesn't work well. In fact, when I first started trading some 43 years ago, that's the way I used to make my trading decisions. We didn't have chat rooms or trading rooms then, but we had news subscriptions, and I would subscribe to all the newsletters. We still had the pundits on TV, telling us what they thought the market was going to do. We had tons of indicators, most likely the same ones you're looking at right now, telling us when the lines crossed or when something happened, what was going to take place. And none of that worked. So as I often state, if it didn't work for me 43 years ago, it's not about to miraculously start working now. What I have found out in my 43 years of trading, starting on the floor of the Pacific Stock Exchange, is that the only traders who are still trading, the only ones who have sustained their careers, are the ones that make their own trading decisions. So when I formulated specialist trading with pro-trader strategies, that was our goal, to simply educate traders so that they could make their own trading decisions, so that we could have tons of more traders who would be able to trade not just a couple of good months, or maybe even a couple of good years, but a couple of decades, maybe 3 or 4 decades. That's the goal. So that's why we formulated specialist trading, simply to teach you how to trade. And you'll see that today in our educational presentation. Now, before we begin, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, specifically using these entry rules to one of our most, I would say, consistent retracement and pullback methods. But please remember that we can in no way guarantee that any of the examples I'm about to share with you will be repeated in the future. And also, please remember, since we are an educational company, all examples are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, if you haven't done so already, please take this time to write down our handle right here and follow us on Twitter. There's our handle, abbreviation for specialist trading. If you're looking for more education on a daily basis, simply follow us on Twitter. You'll see anywhere from signals our strategies have generated to little bits of financial wisdom I've accumulated along the way. Lots of great free information, so please feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are a little bit different from other webinars in that we are first and foremost an educational company. So if you've come here today thinking, well, I've heard a lot about this guy, Steve Primo, he's going to tell me what the market's going to do next week, or he's going to tell me his picks for the stocks to buy, or for what the futures I should sell, or for what Bitcoin's going to do, or he's going to tell me what the best time frame is for his strategies. Trust me, you've come to the wrong place. You can probably leave right now, because that's not what we believe. In fact, it goes entirely against our philosophy. Our philosophy as educators is not to force feed you signals. It's not to tell you what time frame or what market to trade. It's simply to teach you how to trade with the specialist edge. As I've stated numerous times in just about probably all of my webinars, a good mentor, regardless if it's me or someone else, a good mentor never trades for you. A good mentor teaches you how to trade. I mean, think of it. Think if you wanted to learn any hobby, any endeavor, anything along the way. Let's say you wanted to learn how to swim, okay? Your teacher cannot swim for you, okay? Let's say you wanted to learn how to play golf. Well, your teacher, your instructor, he cannot, play golf for you. It's you who has to ultimately do those things. Same way with trading. I can't trade for you, and I shouldn't. You should be making your own trading decisions. So that's our goal, to teach you how to trade with a specialist edge. Trust me, when my mentors, who were specialists themselves on the floor of the exchange, taught me these same techniques and methods, I did the same thing. I said, why don't you guys just tell me what you're buying and selling, and I'll just piggyback. And they said the same thing I'm telling you right now. It's because you will never find your way. You have to find out what makes you feel comfortable. So that's our goal here at Specialist Edge. Now, before we begin, once again, this is a class, so please ask me as many questions as possible. But unlike the other webinars you may have attended, I don't like to take questions with each and every slide. We'll be here far too long. So if you have a question, oftentimes it's answered on the very next slide. But if it isn't, please wait till the very end of this class, probably in the next half hour, and then we'll reserve the remaining portion for questions, okay? The only question I will answer right now is the most common one, and that is this being recorded? Yes, it is. So if you have to leave early, trust me, we will send you each a link to this recording. Now, if you're having technical issues, if you can't hear or see me clearly, please go to your question and answer box right now and just respond yes or no. Now, let's say the screen isn't coming through properly, just answer no. Or let's say you can't hear me, or it's not coming through loud and clear, just say no. Oftentimes, it is your own internet connection. So If you just log off and then log back on again, mostly that is corrected. But it looks like most people are able to see and hear me clearly. Once again, it could be your own internet connection, but we will send each and every one of you a link to this recording, okay? All right, with that stated, let's begin today's presentation. What we're going to be talking about today is strategy number one, probably our most consistent retracement or pullback method. And what we're going to be doing today, we can't give you the entire strategy. That wouldn't be fair to the people that have actually paid for this. We have students around the world who are trading this. So what we're going to be doing is giving you the most important part, which are the preliminary entry rules. If you've been trading for some time and you know basically how to monitor a trade, you'll know when you want to exit. You'll know where you want to place your stop, okay? Usually, one of the most generic ways to trade, if you figure out where you want to get out of the trade with a loss, just double that amount of risk and that should be your exit. That's probably the most generic way to trade, okay? All right, so let's talk about this retracement pullback strategy. It's designed to buy low in an overall uptrend, and it's designed to sell high in an overall downtrend. And it does this by applying a unique Bollinger channel application. Now, most of you should have access to the Bollinger channels. They're a very common tool, a very common indicator. You can find them just about on any charting software package. If your platform does not contain Bollinger channels, you should ask tech support to supply you with them. And remember, this is just a Bollinger channel only method. I know a lot of students say, well, gosh, my platform doesn't have them. Steve, can I use Keltner channels or can I use something else, Bollinger Bands? No, trust me, I've experimented with all those different indicators and they just don't give you the same results. So you need to have the Bollinger channels, okay? And you'll see exactly how they're applied in just a second. Now, the beauty of this is that you can apply this to any market, any time frame, and any direction. When we first started, applying strategy number one and offering this to our students, we basically just said it was a stock-only strategy because that was where my background was from, and I really assumed that most traders would just trade this with stocks. But as we've gone forward over, almost a decade and a half now, our students have told us that it works just as well on E-mini trading, intraday E-mini trading, intraday stock trading, futures trading, commodities, Bitcoin. So it makes no difference what market, could be currency pairs, makes no difference what time frame, makes no difference which direction. With all of our methods, we ask all of our students to first paper trade, okay? Even though you're just getting the entry rules, I want you to paper trade this first. Why? Well, I can almost guarantee you that if you jump in too quickly and start trading this, you'll lose money. And not because it doesn't work correctly, but it's because you're implementing the rules incorrectly. And that's because you jumped in too quickly. It's just like anything, you learn how to play something on piano, maybe something very beginning oriented. If you jump in too quickly and play it for someone, most likely you'll make mistakes. It won't sound the same when you're practicing by yourself because you didn't practice enough. Same way with trading. You need to practice, so please paper trade this until you fully understand the process. Our edge with all of our methods, regardless if it's strategy number one or strategy number 10, it makes no difference. Our edge at Specialist Trading and Pro Trader Strategies is consistency. I know a lot of you think, well, consistency means we have a lot of winners, right? No, that's really not what consistency means. Consistency means that you have an awareness that you will have losses. And there's absolutely nothing wrong with having losses. But a consistent method is one that's able to recoup those losses, oftentimes on the very next setup. So that's what you should be looking for in any method, regardless if it's one of mine or if you go to another webinar, if you buy some $10,000 strategy, it should be consistent. The way you'll know if something is consistent is by looking at your profit and loss statements. If you have a nice upward slope in your profit and loss, that's a consistent method. You're trading it consistently. If your profit and loss is like a roller coaster, it goes straight up, you have these tremendous gains, then all of a sudden it goes straight down. You give them all away, you give them all back, and you're right back at a negative account, and then you go right back up again. That's not consistency. That's more of a gambling type of method. You don't really want to be trading that. Why? Because it won't sustain you. Over time, you'll most likely lose money, and you'll wind up in that 85th percentile of traders who lose money. Remember, we're trying to implement all these things inside all of our students so that they can become consistent traders. Just so that you don't have a couple of good years, but you have maybe a couple of good decades, okay? All right, so that's the highlights of this particular method. Let's look at buy signals. We're going to give you the entry rules. And remember, if you don't get all of these rules right away, I know a lot of students say, Steve, gosh, at the end of the presentation, they ask me questions. What are these rules again? I missed them. Remember, you're all going to get a link to this recording. So if you don't have to copy them down right away, don't worry. You can watch this at your own leisure once you get this recording, okay? All right, rule number one. Obviously, you want to apply the 21-period Bollinger channel, all right? And what you want to see is that all three Bollinger channels are headed in the same upward direction. Now, you notice I didn't say they're all headed in the same sync. You know, they're not in sync. They're just headed in the same upward direction. So as we look here, someone looking at this generic chart would say, well, Steve, this is a downtrend, right? I should be looking to short or sell. Well, once we apply the 21-period Bollinger channels, we see that they're all headed in the same upward direction. Now, here's what we mean by upward. As you notice, these bottom two Bollinger channel lines, the mid one and the bottom, are headed upwards, and the top one is headed sideways. So this is where students have a difficult time. They say to themselves, well, Steve, they're not in the same direction because one is going sideways and two are headed up. Well, if you're not sure, when you see a sideways reference here in the Bollinger channel, someone would say, well, what does this mean? Well, it just means you have to look back from what its previous setting was. Here's where the previous setting was down here. So if it's coming from a lower setting, obviously it's still headed upwards. It's just kind of going flatlining for a while, but it's still headed upwards. It's the stair-step approach. So if they're all headed upwards, that's what you want to see. We're in an overall uptrend, all right? We're not in a downtrend. All right, rule number two. Now, the rising price bar should begin to sell off. Now, you want to wait for a descending bar to touch the rising midline channel. This is our setup bar. Now, I know a lot of you are probably thoroughly confused right now. It's too wordy. It's like, what is that? Wait, hold on. What does that mean? Let's look at the chart here. As we have all these three Bollinger headed in the same upward direction, we usually have the bars of the price bars rising. Many times they'll touch or hug the top Bollinger channel, but all of a sudden they start to decline. This is what we call our retracement or the pullback, okay? Now someone could say, well, how do we know it's not a downtrend? The reason we know it's not a downtrend is because these are three Bollinger channels that are still headed in an upward direction. So we're not in a downtrend. It would be a downtrend if one or all of them were headed down. But so far, as long as they're still headed in the same upward direction, that's okay. This is just a retracement. Now we want to see this retracement or sell-off happen and price starts to descend and touches the midline or intersects the midline. It doesn't have to close below. That makes no difference where it closes. It just has to touch it, okay? This is called our setup bar. Now, a lot of times people will say, well, what happens if it continues going below and these Bollinger are still headed upwards? Well, that will be the setup bar too. We can continue to track it. As long as these rules are in place with the Bollinger, each preceding bar will be a setup bar. So now let's go to rule number three. What we want to do when we enter is not enter at the market. We want to enter along on the first confirmation of price trading, not closing, but trading above the previous setup bar's high. So as we look here, here's our setup bar. Here's our first setup bar because it touched the midline. We don't want to buy at the market because for all we know, it could be the beginning of a downtrend and these things are all going to start heading south. So that's just basically like standing in front of a train thinking that, well, it's going to stop here because Steve said it would stop. No, I have no idea if it's going to stop. So what we want to do is put the odds in our favor by waiting for it to trade one or two ticks above. Now, it's up to you. Use your own discretion. Remember, you're in charge of your own trading, but it does not have to close there. We just want to make sure that whatever our setup bar is, it trades above on the next bar. That's where we're going to be entering. So let's see what happened on the next bar. Well, the next bar went lower. Now, this is where students usually lose money. They say, well, okay, so it didn't trade, so I guess I won't trade it. I guess we're in a downtrend now, right? No, because which direction are the Bollinger still headed? Even though they're all going sideways, they're still headed upwards because they came from a lower setting, a lower plotting. So this is not a negation of the trade. Now we just simply label this the new setup bar. And rather than pay up here, if we trade one tick above, we're moving our entry down right here. So this is the beauty of this entry technique because now the setup is still valid and we're now going to get at an even lower price, which can maybe give us some better profits. So now we're waiting to see if we trade one tick above. And look what happened. The very next bar, we gapped up, and if you decided to buy on that opening, well, you would have entered right here, and by the end of the day, had a very nice trade. And going into the future, you would have even been able to make more money. Now, I know a lot of you are saying, wow, this is great. It's so simple. Where do I exit? Where do I place my stop? Remember, those are all included in the course. In fact, I'll tell you, in our course, we have 6 or 7 different ways to exit. We have 6 or 7 methods to place your stop. And we actually have about 5 or 6 different ways to enter. This is our most basic entry point, our most conservative. That's why I'm giving it to you, because it's for beginners. But remember, our job as an educator is to give you all the different variables and the options, to present them to you, and then work with you so that you can decide for yourself what makes you feel comfortable. Just like, someone who's swimming saying, well, I don't really feel comfortable doing the backstroke, but can you teach me how to swim underwater? Okay. A good mentor has to be able to teach you the different ways so that you can feel comfortable within, whatever you're learning within the realm of education. It's the same way. If I taught you only one way to trade this, well, then that's a system, and that means everyone has to trade the same exact way. And that goes entirely against our philosophy, because our philosophy is no 2 traders should trade alike. We have a good crowd here today, a very big size class for a Saturday morning. And I want to teach you this, but I don't think any of you should trade the exact same way. You should trade what makes you feel comfortable. So in other words, someone would say, well, Steve, I feel comfortable with a lot of risk. Great. Then you would use, if you took our course, you would use one of our risk stop placement levels that gave you a lot of risk, so you could stay in the trade longer. Now, someone else could say, Steve, I don't like a lot of risk at all. I want the least amount of risk as possible. Great. We have stop placements for that. Someone could say, Steve, I feel comfortable with this entry. I like that confirmation. Great. You can use this one. We also have places to place limits, specific places to place limits in this trade and how to apply them. You could use that as well. Someone could say, well, Steve, I like to get in and out of trades. I don't like to stay and hold my money overnight a long time. Great. We have ways to get out of this trade on that first bar if you want it. If someone says, no, Steve, I feel comfortable holding positions overnight. In fact, I want to get as much bang for my buck. We have ways to do that. So do you see, as an educator, we should never tell traders to trade the same way. That's how you lose money. That's how you join that 85 percentile. The way you become a consistent trader is by being presented with all these different variables and then picking what makes you feel comfortable, learning how to apply it, and then you making the decision how to trade. You see how we're different from other educators you may have gone to in the past? We want to put the power in your hands and then say goodbye. Good luck. You're a consistent trader now. You no longer have to rely on anyone or anything else. That's the way trading should be. All right, here's now the examples of how you sell, because they're basically the same thing. We're just going to turn the tables upside down here. Now we want to apply the 21 period Bollinger channels once again, but all 3 channels now must be headed in the same downward area. Now, if we look at this, once again, most traders would say, Steve, higher highs, higher lows. Obviously, we're in an uptrend. This is where I want to buy, right? Well, what is the market telling us? You may be saying, well, Steve, there's going to be some great economic news here. There's going to be some fantastic earning reports, and all the institutions are buying. So I've got to be a buyer too. Look at the uptrend here. It's really strong, tremendous volume on the upside here. We're in the midst of a really nice bull run here. Okay, you see how all my decisions are based on outside sources, on outside things and decision making, but we're not listening to the market. What is the market telling us? Well, we apply the 21 period Bollinger channels. We see that all 3 Bollinger channels are headed in the same downward direction. Now this one, the bottom one, because of the space we had on the chart, could only show you the flat line here, but it came from a higher setting. So that means we're all headed in the same downward direction. So the overall trend is down, and we're looking here. This is just a short-term uptrend. It's just a retracement. All right, rule number 2. We're going to see price fall, but it now starts to rise. This is called our retracement or our pullback. So we wait for an ascending bar to touch the declining midline channel. This is our setup bar. So once again, as price kind of sells off and starts to touch or hug this bottom line, then it will start to rally. And we just simply wait for that rally for it to either touch, intersect, or even trade entirely above. This is a more conservative approach. I've talked about this before in past webinars. This is our more conservative way to enter. We don't even have to wait for it to touch. It can be entirely above. This is our retracement rally, and then this is our setup bar. So this is valid. Now, we don't want to sell at the market. We don't want to buy a put at the market. We want to wait for it to trade. We're going to enter on the first confirmation of it trading below the previous setup bar's low. So here's our setup bar. We're not going to just simply sell it to market because for all we know, it can continue to go up and then it will turn into an uptrend by these changing direction. But in order to, avoid that, even though it's not 100% guaranteed, to put the odds in your favor of that happening, we only want to go short if it trades below. All right, so let's see what happened on the next bar. Well, it did trade below, so we would have entered on the very next bar. Remember, we're not going to tell you how to enter. In other words, you could buy puts. You could buy some type of spread with options, with a bias to the downside. You could short the stock if you had a big enough account. You could buy the future. It's up to you. You're in charge. All our job is as an educator is to tell you how where and to help you identify where these high probability setups are. In other words, say I was teaching you how to golf. I'm not going to tell you what golf clubs to buy. That's your decision. Okay. If I were teaching you how to swim, I'm not going to tell you what goggles to buy or what swimsuit to buy. That's up to you. It's the same thing with trading. I'm teaching you where these high probability setups are. I'm not going to tell you that this is for options only, or this is for shorting the stock, or this is just for future. It's up to you how you want to apply this. Okay? Now that you know the rules, you can decide any way. Remember, we're wanting to give you the freedom to make your own decision. So either way you would have decided how to get in, that would have been a nice little trade, right? You could have gotten out using one of our exit points that got you in and out in a couple of days. You could have used another one that had this most bang for your buck. In fact, you probably would have still been in this. There's all different ways to do it, but you are the one who decides, not us. All right, so let's look at some recent strategy one examples. Now that you understand the process, let's look at some more examples so you can really fully understand it, and then you can possibly, if this is of interest to you, you can know exactly how to apply this next week if you'd like. But please paper trade first. Remember, all the examples you're going to be seeing have been taken from using the PTS Primo Charting Platform. This is the platform we designed to make trading simple, especially retracement trading. Let me show you the process that you would go through on our platform. Let's say you were a student of mine with the strategy number 1 course. Well, no longer would you look at this and say, okay, we're in a downtrend. You wouldn't even think that anymore. The first thing you would say is, well, I'm going to apply the strategy number 1 dodging channels. Now, here's the beauty of our platform. Everything is pre-formatted. So if you have another platform that doesn't have dodging channels and you have to look for them or have to ask, guess what? It's already pre-formatted. It's already set. All you have to do is click on strategy 1. In the drop-down menu, click on the indicator. That's the indicator you'll be using. And they automatically appear. It takes less than half a second to do this, okay? Nothing you have to go in your edit box, nothing you have to download, nothing you have to go searching for. It's right there. All right? Now, which direction are they headed? They're all headed in the same upward direction. So this is not a downtrend. This is a retracement. Okay? Now, you've taken the course. You know all of the course rules. You know exactly what you want to look for. Now, in order to check your work, we've also made this into a learning tool. So click on strategy 1 again to see if you've correctly identified a setup. Click on signal arrows, and you'll see a green arrow appear under the valid setups. If you think there's a setup and you click on the signal arrows and there's no arrow there, that means you haven't learned the process yet. But if you fully understand it, you'll see a lot of green arrows. So guess what? You are learning through this, back and forth interaction with the platform. You're learning how to properly identify on your own for the very first time. You don't have to rely on someone telling you on TV, I think we should buy this, it's going up, or you don't have to rely on some kind of chat room. You are learning how to make your own decisions, okay? Now, this is a buy setup. We're going to go long right here. By the way, this is also generated on our platform. If you choose to see where the entry point is, you'll see a little dotted line like this appear. You could have entered on the very next bar in GPC, and coming into September, October, 11 points in the next 3 weeks. Not a bad little trade, right? As we look at BIIB, most traders would say, well, Steve, look at this. This is major Fibonacci support. This is where all the institutions are buying. How can I sell here? I can only be long, right? So let's say you jump in and buy, all right? You're all excited. You think you're going to have a really nice trade. Well, students of mine will not listen to institutions. Will not wait to see who the election goes to. We don't care about earnings. We only listen to one thing, the source of what we're trading, which is the chart. So what's the chart telling us? Well, with a little help and structure of the Donchians, we apply it, simply hit strategy 1, click on indicator, and it's telling us that the trend is down. This is just a retracement. It's just a pullback rally. Why is it the trend down? Because all three Donchians are headed lower. Until they all start to go up, even one of them goes up, we should look at this as a selling opportunity, not a buying opportunity. I don't care what the institutions are doing. All right. And then what do we have here? Well, price is hugging the bottom line, it starts to rally, and now it intersects. So you've taken the course and you say to yourself, you know what? I think this is a buy signal, but I just want to check my work again. Click on strategy 1, click on signal arrows to give you feedback if you're right or wrong, and you're correct. There's a red arrow above. So this is how you learn how to trade. Remember, we are an educational company. We don't simply want you to come to our website, go to a signal service and say, okay, well, Steve likes this, so I guess I'll buy this, or Steve says to sell this, so I'll sell this. I mean, that would be doing you a major disservice. You have to make your own trading decisions based on things that have stood the test of time. And I started trading this strategy some 4 decades ago, so it's still very consistent. Now, had you gone short, remember, you could use our basic entry, which is 1 tick below, sold on the very next bar there. Either you could have got puts or, shorted the stock. It's up to you. And in 3 days, 12 points. Not a bad little trade, right? All right, let's look at some more examples here. Here's one in PSA. Here's the first setup because we intersected. The second was invalid, so there's no valid setup here. But now on the third bar and the fourth bar, we have valid setups, 15 points in a little over a week. Remember, these are probability. This is potentially you could have captured. It's up to you how you want to exit. We have a sell signal in Boeing. Okay, this was mid-September coming into October. Could have gone short on the very next bar. Now, this is where students lose money usually because they'll say, well, Steve, I sold and then it closed up. So I have a losing trade right now. So I got out because it looked like I was going to lose money. Remember, depending on which stop placement you use, most likely you'd still be in this trade. The rules are not, it does not have to close below here. You just have to intrabar trade there. Now, had you exited because you got scared, well, it's your choice once again, but look what happened. Potentially you could have made 18 points if you just held on. Letter Z, we see here that we have a series of valid setups. You just keep lowering your entry point until ultimately you enter. Potentially could have captured 28 points coming into the first week of October. This was just about 2 or 3 weeks ago on letter Z, Zillow Group. How about STSA? All right, sometimes it takes a little bit longer. Nothing ever works perfectly. As we see, we have 3 setups here, valid setups to keep moving up our entry point. Ultimately, we get short, and then we had to kind of wait 2 or 3 weeks. Nothing really happened. Most traders would say, well, I'm getting out of this. I have a little profit, kind of basically breaking even, so I don't know what to do here. Well, it's up to you, remember, once again, but if you're not stopped out, oftentimes you just have to wait a little longer because look what eventually happened. There was a 20-point drop in 1 day. Now, most students would say, well, how did you guys know that? Did you follow the economic news that came out or something? Remember, you can follow economic reports, you can follow fundamental news, but it's not required. I stopped looking at news 4 decades ago. I'm still here, so I'm living proof that it's not required. You don't really need it. And here's a perfect example. How did we know this was going to drop 3 weeks in advance? Well, we didn't. We don't predict how high or how low something will go. We're just listening to the market. Remember, our job as a market trader is simple. Listen to the market. It tells you what it wants to do. And then simply jump on board. That's it. That's all we have to do. We don't have to analyze and figure out how high or how low something will go. We don't have to analyze what the earnings are going to be. We don't have to figure out what the institutions are doing. We just have to learn how to listen to the market. It usually tells you just about everything you need to know. Only trouble is we've never been taught to do that. We're always taught to look at who's going to win the election? Who's, what is this guru saying on TV? Or what's the economic report, the jobless claim is going to tell me? Here's another example in Roku. As we see, here's the setup. And this one, once again, you had to wait a couple of weeks. We always teach our students, listen, it's your choice. Remember, you're in charge. But unless you're stopped out, you can still, it's perfectly admissible to stay in the trade. And it would have been wise to do that because coming into the second week of October, potentially you could have captured 60 points. So you just had to have a little patience on this one. As we look at SSD, as we look at Simpson's Manufacturing, most people would say, well, listen, we're going here, and this is why most students lose money. They get caught up in the short term, and they say, I'm going to buy here. And then this happens, so they say, wow, was I wrong? Okay, I exited, now I'm going short, and then this happens, okay? So most students looking at this chart would say, Steve, there's no trend here. I don't know how you can find a trend. We're basically just going whipsaw market. Well, that's not really true, because if you apply the Donchian, which direction are all three headed? They're all headed in the same downward direction. So the market is telling you it wants to go lower. You see how students usually lose money? Because you're a day late and a dollar short. But if you listen to this simple retracement strategy, you knew that, well, this was an opportunity to go short. Once we intersected, here's our first setup, second, third, fourth. You just keep following it all along till you could have gotten short here, and in 3 days potentially made 20 points. And then since all three are still headed downward, you wait for it to happen again. 1, 2, 3, and then ultimately gone short. Look what happened. Quick 7 points in 1 day. You see, trading is really simple. It's just the trader who makes it more complicated than it really has to be. All right, let's look at some higher time frames, because not everyone trades on daily bars. What if you trade weekly bars? All right. What if you trade monthly bars? All right. Here's a weekly bar of QDEL. All right. Quidel Corporation. Once again, oh, this is obviously in an uptrend. And then what happens? It looks like we're in a downtrend. Let's apply the Donchians, apply the indicator, and we're in an uptrend. We've been in an uptrend the entire time. Why? Because all three of these are headed upwards. So this is not something to look as a downtrend in the stock, even though they're weekly bars. This is a buying opportunity. This is a retracement. Right here was our first setup. Here's our second. Here's our third. Okay? So we would have originally entered here. We lower it down to here. We keep lowering it down as long as these are headed upwards. Now, if, say, on the very next bar we didn't enter, and then all of a sudden this one decided to go lower, well, then all bets are off. Then this is not a valid setup. But since that didn't happen, we think we should be going long. Let's check our work, click on signal arrows, and yes, you are finally learning how to trade on your own. You are not relying on anyone or anything else. You would have entered and potentially captured 115 points coming into October, okay? It just happened this last month. Here's another example. In RETA, R-E-T-A. Obviously, we're in an uptrend, right? Not really. All three Donchians are headed lower. Even though you can't see this one, it came from a higher setting. So we're in a downtrend, and this is just a retracement or a pullback rally. Now, here was our very first setup bar because we touched the Donchian channel, the middle one. Here's our second. So we would have originally entered here, but we never traded down there on this weekly bar, so we just raise it up here because this is valid. It's a valid sell signal. We enter the next week and potentially could have captured 60 points. Now look what happened here. We gapped down almost 50 or 60 points. You see how this works no matter if we're looking at daily bars or weekly bars. Let's look at a weekly bar of Netflix. This was in March. Remember when the market was falling out of bed in March and April because of the virus? Well, look what was happening in Netflix. All three of these weekly Donchian channels were headed higher. As we started to go through the sell-off, which was the virus, we were actually generating buy signals. Here's another one. So in mid-March, we could have entered, had a really nice 205-point gain coming into the summer. Okay. Remember, it's up to you. A lot of our students may have taken 20 points or 10 points and said, thank you, I'm out of this. Maybe some took 100 and said, wow, 100 points. I'm not going to complain with that. Maybe some students are still in this trade. It's entirely up to you. We're not going to tell you how to trade. We just simply teach you the things that work and then let you decide. Here's a weekly chart and beyond, BYND. All Donchian channels are headed lower. This previous setting was from a higher direction, so they're all in the same direction. This was in January, well before the news came out about the pandemic. Okay? So as price was rising, where most people were caught off guard and they would have been buying into this, we were looking at this as a seller's opportunity. You could have gotten short in January, well before the news came out, and look what happened. In March, potentially captured 62 points. Now, let's say you were long beyond, and you thought, well, you know, if it's a sell signal, maybe I should exit some of my long positions or, you know, use this to get out, and maybe I'll get back in. That would have been a wise choice as well, and save yourself 62 points or so. Now, let's look at a monthly chart in Shopify, okay? Same thing, nothing changes because we went to a higher time frame. All three Donchians are headed in the same overall upward direction. As they head upwards, they touch and sometimes hug the top Donchian. but now we start to sell off. Just on one bar alone, we are now intersecting the midline. So that's a buy setup. That's a valid setup bar. Now, if we don't trade here and go lower on the next bar, and if all these are still headed upwards, it's still a buy setup. Let's see what happened. Well, we would have gone long in April of this year. That's 630 potential points you could have captured to the upside. Maybe you had long-term options, okay? But you see how this doesn't matter. It doesn't matter if we're looking at a monthly chart or a daily chart. All right, so let's recap before we go into question and answer portion. Remember, it's our very consistent retracement and or pullback strategy. They're basically the same thing, just different names for the same thing. Now remember, I just shared with you examples on stocks, but I personally use this on E-mini futures, on intraday trading E-mini futures. You can use it on forex, on currency pairs, on intraday currency pairs. You can use it on Bitcoin. You can use it on commodities. We have a lot of traders who use this on commodities. All right. Remember, you have to use the 21 period dodging channels. Ask your tech support if you don't have it on your platform. So you can apply it to any market, any time frame, in any direction. But please, I know a lot of you are excited right now. Your eyes are lighting up. You're saying, wow, I'm going to start trading this Monday morning. Please, paper trade it first. As I stated earlier, I can almost guarantee if you're going to start trading it too soon, you will lose money. Not because it's working incorrectly, but because you are implementing the rules incorrectly. Maybe you're not waiting for it to touch the midline. Maybe one or two of those dodgings are headed in the wrong direction and you think they're all in the same direction. So remember, you have to paper trade it first to really understand the process fully. Our edge here with all of our methods is consistency, meaning there will be losses from time to time. That's okay. A good method, a consistent method, is able to recoup those losses, oftentimes on the very next setup. So as we close here, I want you to ask yourself, and ask yourself honestly, do you think this strategy can help your trading for the remainder of 2020? We only have a little over 2 months left, and most likely you're nowhere where you thought you'd be at the beginning of the year, right? Beginning of the year, we all make these promises of where we want to finish the career, have some extra money, have that maybe supplemental income coming up. I mean, we maybe want to, feel that we're going to be able to retire, and most likely none of us are at that point. That's okay. All right, don't worry about it. What you want to do is be able to improve your trading, to take it to the next level. And I really think what we're going to be offering you today will be able to do that. Here's our Saturday morning discount. This is our offer for all the people attending, taking time out of the Saturday mornings. We're going to offer you strategy number 1, all right? This is the complete course rules, our most consistent pullback and retracement method. You'll get all the entries, all the exits, and all the stops. Remember, I just shared with you the basic format, all right? Now, we have aggressive and conservative versions. I shared with you the more aggressive way to trade. We also have a conservative way to trade this as well. But you'll get all the complete rules to both versions. You'll get the complete dodging channel settings. You can apply to any market or time frame. And you'll get educational correspondence as well. All right, that means my personal email address where you can contact me whenever you'd like with a question. All right, that's our strategy number 1 course. But we're not stopping there. Remember, this was based off of retracements. Retracements like to buy low in overall uptrends, and they like to sell or go short high in overall downtrends. We have another offer for you today. This is strategy 3A. This is a continuation method, entirely different from what I just taught you, because a continuation is not the same as a retracement method. A continuation method looks for an already established trend, like say a stock or a future or a currency pair that's been going straight up and pauses for a little bit. Well, the continuation method looks to jump in before it resumes its upward movement because it usually can identify that there's more room to the upside. This also works to the downside. Let me share with you exactly how this works. It uses a unique Bollinger Band setting. I've talked about this before in past webinars, but as you see here, we had a nice little run up in TRIP in this older chart. Most traders would say, well, it's kind of gone up a lot. I think it's overbought here. Maybe I should just wait. Strategy 3A generated a buy signal, and look how much more potentially you could have captured with that nice setup. And it works to the downside as well. If you look at an older chart in WYNN, win, all right? Most traders will say, well, Steve, I can't sell now. We've already broken support, but most likely it's going to bounce a little bit. It's oversold. Well, it generated a sell signal here. And look what, you had a lot more room to the downside. So you see, this is completely different from the actual strategy 1 rules I generated and gave you today. All right, you're going to learn all of the entry rules and all the rules for exits, stop placement to strategy 3A as well. Now we're throwing in extra bonuses. In fact, 7 Saturday morning bonuses. Bonus number 1, you're going to get the add-on. So if you have Metastock, MT4, NinjaTrader, TradeStation, you'll be able to get the add-on to download the up and down arrows for these strategies. You also get bonus number 2, our Secrets of a Stock Specialist course. Several years ago, I was asked to be the head speaker at a live conference in Denver, Colorado. I spoke for 3 hours and they recorded it. And so they gave us the recording. We now offer this to you as a Secrets of a Stock Specialist 3-hour video seminar. We're going to throw that in as well. Bonus number 3, you'll get the PDF version of my book. In my book, I give you a trade-by-trade detailed account of my trading during the crash of '87 on the floor on Black Monday. This is a great opportunity to see what it was like to trade on the floor of the stock exchange. You'll get the PDF version of that. Bonus number 4, 6 months of our PTS Primo Charting Platform. Okay, I'm going to come back to that, but let me go to bonus number 5. This is Secrets 2.0 course where we take it up a more advanced level of different techniques and different edges to trade the markets. Bonus number 6 and 7 are scanners on our platform. You can have the individual scanner, which is bonus number 6, or the multi-scanner. You can have both of those to work with, so you can scan for multiple strategies or just one at a time. These are great offers, but let's talk about bonus number 4, because I feel bonus number 4, with all these discounts, bonus number 4 is by far the most, I would say, not as well as popular, but most advantage you're going to have with all these bonuses. Why? Because there are so many more things on our platform. It really is a teaching tool. It's like having your own personal mentor right there sitting alongside of you. And you're not going to just get the strategies alone, strategy 1 and 3A, the up and down arrows and the pre-formatted indicators, but you'll also get the scanners, which we talked about. You'll get our enhanced buy sell line. That's an overall trend identifier. And you get 4 different features. I've talked about this before. Our strength of trend tool. That's a tool I developed with ProTrader Strategies, which has an uncanny ability of finding out whether there's more movement left to the upside or the downside of a trend. Auto-generated exits and personalized tech support. Now let's just take 2 of these great features that you're going to be getting in this great offer here. That's the scanner and the generated exits. Let me show you how you could have applied these last couple of months here. For example, once again, where you'd click on the strategy number 1 on a platform where you clicked on indicators and arrows, what you would click on now is scan. And you'd see this drop-down page appear, and you would scan for whatever market you like to trade. It could be trading currency pairs. You would get a full list of all the currency pairs. If you wanted to trade Asian markets, you get a list of all the Asian markets. You want to trade the NASDAQ, the S&P 100, all the complete data list of all these different. We provide you with all this. And then click on scan. And in less than a minute or 2, you'd see a green or a red horizontal bar. Those are just the corresponding buy signals and the corresponding sell signals. So let's say we would have scanned just a month or so ago. You would have scanned and seen that in Skyworks, SWKS, there was a buy signal. The Donchins are headed higher. And you could have scanned through the entire NASDAQ, and you wouldn't have had to look through hundreds of stocks. You could have seen that, okay, this fits all the rule requirements. I know what I'm looking for, so it's not just a system. You actually have an idea of why this is a valid buy signal. Then you could have chosen to enter. Now, here's the other thing we offer. You could have clicked on strategy number 1 to help make your decision. Click on extension exits, and then automatically you see 3 or 4 exit levels appear. Now this can help you make your decision whether you want to trade this or not. All right. Now let's say you're the type of trader that likes to get in and out quickly. Well, you would have exited right here at 147.13. If you're more of an intermediate or swing trader, you get out right here. And if you're someone who likes to, get as much bang for your buck, you could get out at 153.97. Now remember, this is just one. It's just one of our exit methods using these different levels. We have 6 more, but this is the one that's already pre-formatted and auto-generated on the platform. So if you decided to use this exit method, you say, you know what, I'm going to get out right here. I like to get some more bang for my buck. And you entered the trade, in 3 days, it would have reached that level, okay? A quick 10 points in 3 days. Not a bad little trade, right? And look what happened after that. So do you see how our tools can really help you? Not only did you have a very consistent retracement method that got you long, but you also made a quick 10 points in 3 days prior to it changing directions. See how the Donchian channel started to head lower in the opposite direction. So now we're in a downtrend. This is the beauty of all the things that are offered. You're getting over 40 years of information and things that I've accumulated in my career right there, one click away. This is a tremendous offer. So let's break it down for you, okay? Here's our Saturday morning discount. You're getting strategy number 1, you're getting strategy 3A, you're getting 6 months of the platform along with the 7 bonuses, including a PDF of my book. All these things along with educational correspondence with yours truly. If we bought these separately, most likely it would cost you over $7,200, okay? Too much money. What we're doing is discounting it for the Saturday morning attendees down to $297, okay? This is a limited time only, probably for the next 48 hours. You're going to be saving close to $7,000. So for less than $300, you're getting over 40 years of information and things I've accumulated, education to help you take your trading to the next level. Remember, a year from today, you will have wished you became a member of these courses. You don't want to sit on this great offer, less than $300, and then say a year from today, gosh, you know what? I guess I can't trade anymore. I've run out of money. I wish I had educated myself and taken those inexpensive courses. Maybe I would be really a lot more consistent and that much more ahead of the game. Take advantage of this offer, invest in yourself, $300. I'm sure many of you lost more than that this past week trading, okay? Here's how to take advantage of this. Contact Pro Trader Strategies. They are my sister site. I developed a platform with them, and they're in charge of all the discounts and the courses. You can either email them, but I would suggest calling them if you want to make a purchase over the phone at 310-598-6677. Now that link you see at the very bottom will take you to the information page. You can also sign up online if you'd like, but that's not a live link. You'd have to copy and paste that onto your browser. If you want a live link, there's one posted in the chat box on the far right-hand corner of the GoToWebinar column, so you can click that on. They've posted one there, and you can simply click that to take you to the information page. All right, so I'm going to leave this information up here if you're deciding whether you want to be a student of mine or not. Remember, I would personally say the easiest way is to give Pro Trader Strategies a call if you have questions about tech support or about pricing. They would be more than happy to give you some more information and to tell you how long this great offer is going to last. Now, any questions concerning teaching or what I just shared with you today or what I taught you today, now's the time to ask. Go to your question and answer box, type in whatever's on your mind, and I will be here to answer it. Okay, it says, in your course, do you use Strategy 1 with the 50-day simple moving average? Good question. Yes, we do, but that is the more conservative version, okay? Remember, we have an aggressive version and a conservative version. What we do is with our students in the beginning, especially if you're beginning traders, we advise, remember, we actually don't advise, we suggest all of our students to apply to 50 because that's a better way to be in sync with the overall trend. It's kind of similar to the same thing that a lot of students do when they use 2 different time frames. So many students always ask me, Steve, why don't we get in sync with the weekly time frame so that we know what to do on the daily? And I said, there's no real reason you need to do that. In my 43 years of trading, I personally have never found any consistency with that, so I don't use it and I don't teach it. But what I do say, if you want to use that same concept, then trade with the 50-period simple moving average. That will tell you the overall trend, and then apply strategy number 1 with that, okay? Now, if you want to trade a little more aggressively, you don't need to. Remember, you are in charge. We don't want to tell traders this is a system. A system requires that everyone trade the exact same way. We don't believe in that. What we want to do is provide you with different options, different variables, and then let you decide, okay? Let's see, Gene, good morning, Steve. I have purchased your strategy 1 and 3A. What is the difference between the dodging channels and the popular Bollinger Bands, and when are they best used? A good question, Gene. Well, the dodging channels are used mainly for, the way we like to use them is for determining the short-term trend, the same with the Bollinger Bands. But remember, they're a good way, a good generic way to determine the short-term trend. All right, the same way with 21-period Bollinger Bands and with the, with 21-period dodging channels and with the Bollinger Bands. But how we apply them in terms of trading is we have to apply a little structure. Strategy 1 is a pullback method. Therefore, it uses the dodging channels. That's where it differentiates. Now, you can't use a pullback with strategy 3A. It's more of a continuation method. The way I stated, that's for waiting for something to go high and then buying higher, okay? So they're completely different methods, and I'm sure you've seen that in the way the rules are constructed. They're completely different. So one is used for buying at a lower price. Another one is used for buying at a higher price and then selling at a higher price, okay? I hope that makes sense. One is a pullback method or retracement method. The other one is a continuation type of indicator. As an example, you showed the SPX 5-minute in the last hour when it would have to be shown somewhere to buy. Would have to be shown somewhere to buy. Well, remember, that's just showing you, that wasn't a 5-week. As an example, that was a, if you're talking about the opening example, was actually a weekly example. It wasn't a 5-minute. Now, you can easily apply that to the futures because the S&P, if you're looking to trade the S&P, you can just transfer that over into the spiders, SPY. You can transfer that over into the E-mini futures, which is what I like to trade. You can transfer that over to a stock that mirrors, that has a high correlation with the S&P. So it really is very simple. A lot of traders do that. They like to take their signals off of the S&P index and then relay it or transfer it onto the same time frame of either a stock or a future or just some market that mirrors that. It's very simple, okay? In all CH bands, I'm not sure what CH bands are. If all the CH bands, or maybe that means Johnson channel bands, are headed higher and price pulls back but doesn't touch the middle band, and the next bar trades above the previous bar's high, can that be taken as a buy? Well, that's pretty much, it's up to you. I'm not saying that you can't do that because, once again, that's not our role, that's not our mission. But that is not falling within the realm of what we have found that works. Many times you'll see setups like that, and then they'll go up for one bar and then go straight down and touch the midline. So I would say, listen, if that works for you, if you've seen a lot of high probability with that, then go ahead and trade it. But you're going to have to research that in paper trade to see if it has a high level of consistency for you. I've personally found the highest level of consistency is when it comes all the way back and touches. But if you find that it works well, then go ahead. You know, sometimes in different markets it works well and other times it won't. And if you're trading a specific market where it does work well, then go ahead, by all means. It's your decision. This is Steve. I'm your customer. I love your material. Thank you. Thank you very much. I cannot see live futures on your chart, and where can I buy a cheap data feed for futures to strategy 1 and 3A? Thanks. I would suggest contacting Pro Trader Strategies, Gene. They are more in charge of tech support or anything going along with data. And we're not affiliated with any of the brokers, so we can't really give out that information. But because they're more of tech support along that line, and they can help you along that. I'm sure they've gotten that question from a lot of their trading consultants. I would give them a call, and they could help you, okay? Since you're already a customer, they would be more than happy to try and answer that and give you a better reasoning as to what to buy or what to look for. I know there are some inexpensive platforms online. I would just say you have to do that. I see someone is answering you right now. You can use interactive brokers. So contact Pro Trader Strategies or look at your answer box right now, and there's someone answering that for you, okay? Because once again, the way our companies are structured, anything concerning teaching or trading, I am highly qualified to give you an answer on that. Anything concerning tech support or actual platform usage or third-party platforms, Pro Trader Strategies would help you along the way there, okay? Good questions, though. Wow, you guys seem like experienced traders here. It's good to know. I really think these strategies can help you tremendously because we're giving you the best of both worlds. We're giving you, first of all, a retracement pullback strategy. So if you're the type of trader that likes to buy at lower levels, inexpensive levels, and then take advantage of the next run up high, then strategy 1 is perfect for you. But a lot of times, we've all seen this before, when the market all of a sudden takes off either to the downside or to the upside, it never retraces, right? It never pulls back. And so you can be waiting days, weeks, months for a retracement. It'll never happen. We've seen that currently a lot of times with these straight up markets. They just keep going higher and higher. That's where strategy 3A fits in perfectly. So you're going to get the best of both worlds. You're going to get a method that can buy low and sell high. You're also going to get a method that can buy high and sell higher. So for these different market environments, you'll be that much ahead of the game, okay? And so take advantage of this. Also, you're getting these 7 extra bonuses. You're getting the add-ons. If you want to continue to use NinjaTrader, continue to use TradeStation, Metastock, MT4, you'll get the add-ons for those, meaning the up and down arrows. If you want to take more advantage, you'll be able to use 6 months free of the platform, which you'll have the scanning capability. I mean, think about that. If you like to look at a nightly list of stocks for strategy 1, you'll be able to scan for that in a matter of minutes and see what the best setups are for the next day. Let's say you like to scan for strategy 3A. You can scan for that as well. What if you want to scan for both of them? You'll have the ability to scan for both of them with our multi-scanner. Let's say you want to use some of our different techniques, such as the strength of trend tool. Let's say you're in a trade and this is just going in your favor tremendously. Our strength of trend tool will have the ability to tell you if there's more room left in the trend or if it's running out of steam. There's just so much information on our platform that you won't find anywhere else. These are techniques and tips and strategies and methods that I've accumulated in 4 decades. Lastly, you're going to get me right there as your trading consultant, as someone who can answer any question you'd like. Anytime you have difficulty, you're not sure if you're learning the process well, or if you want questions, you can send me a snapshot of a trade you're currently in or paper trading, and I will answer it for you to see if you're on the right track. All of this for less than $300. Remember, most of you most likely lost more than that in the last month, okay? Take your trading to the next level. Become a student of mine. Take advantage of this less than $300 course, okay? Tons of information wrapped up for less than $300. You can't get any better than that, okay? So as we close here and take one last look at our disclaimer, I just want to thank you for attending on our Saturday webinar. I really wish you all the best of luck of trading, but most of all, I really look forward to you becoming students of mine in this great Saturday offer, okay? Strategy 1 along with Strategy 3A. Thanks so much. Have a great weekend. I'll see you next time. Be sure to give Pro Trader Strategies a call if you have any questions, okay? Thank you so much. I'll see you next time. Bye-bye.